Welcome to Skytech-Lens. The world of technology is holding its breath. The U.S. has just imposed a 100% tariff on key Chinese goods targeting semiconductors, the lifeblood of modern tech. This is more than a trade dispute. It's a bold move in the escalating rivalry between the U.S. and China. The official aim: bring manufacturing back to America and reduce dependence on China. But the cost is high. Companies and consumers now face a new, uncertain landscape. Global tech supply chains, built over decades, are suddenly in jeopardy. For Nvidia, a leader in AI chips, this is an unprecedented challenge. The stage is set for a conflict that could reshape the future of technology. Nvidia, the world's top AI chip designer, is caught in the crossfire. The company, known for its cutting-edge technology and innovation, has found itself in a precarious position due to escalating geopolitical tensions. The company halted production of its H20 chip, designed for China, after tariffs made it unprofitable overnight. This chip was expected to be a game-changer in the Chinese market, offering unprecedented performance and efficiency. The financial hit was immediate, compounding earlier losses from U.S. export restrictions. Nvidia's stock took a nosedive, and investors were left scrambling to reassess their positions. The company had already been grappling with the impact of stringent U.S. export controls, which had limited its ability to sell high-performance chips to Chinese customers. China, meanwhile, discouraged its tech firms from buying Nvidia chips, citing security concerns. The Chinese government has been pushing for self-reliance in technology, aiming to reduce its dependence on foreign suppliers. This move further isolated Nvidia from one of its most lucrative markets. Nvidia is squeezed from both sides, blocked by U.S. policy, and shut out by China. The company is caught in a geopolitical tug-of-war with both superpowers using technology as a battleground. This has left Nvidia in a state of limbo, unable to fully capitalize on its technological advancements. The company can't build or sell its product in its biggest growth market. The halted production lines and empty factories are a stark reminder of the challenges Nvidia faces. The company had invested heavily in its Chinese operations, anticipating significant growth, but those plans are now in jeopardy. Executives face a stark choice: comply with U.S. law and lose China, or risk everything. The boardroom discussions are intense, with leaders weighing the potential risks and rewards of each option. The stakes are incredibly high, and the wrong decision could have catastrophic consequences for the company. The decision to halt production wasn't just business, it was survival. Nvidia had to make a tough call to ensure its long-term viability. The company is now focusing on other markets and exploring new opportunities to mitigate the impact of these geopolitical challenges. Nvidia, once a tech titan, is now a pawn in a global power struggle. The company's fate is being decided not just in boardrooms, but in the halls of power in Washington and Beijing. This struggle has highlighted the vulnerability of even the most advanced and successful tech companies. The company's future, and the future of AI, hangs in the balance. Nvidia's innovations in AI and machine learning have the potential to revolutionize industries, but only if the company can navigate these turbulent times. The world is watching closely to see how Nvidia will adapt and overcome these challenges. The trade war has made even giants vulnerable. Nvidia's story is a cautionary tale of how quickly fortunes can change in the tech industry. As the company navigates this complex landscape, it serves as a reminder that in the world of technology, no one is invincible. The creation of an AI chip is nothing short of a global symphony, a feat of engineering and logistics that spans continents and cultures. It begins with the spark of innovation in California, where teams of engineers and designers imagine the next leap in artificial intelligence. But that's just the first step. The blueprints are sent across the Pacific, to the cutting-edge fabrication plants of Taiwan, where the world's most advanced chips are brought to life. Meanwhile, the components that make these chips possible, tiny capacitors, resistors, and intricate circuit boards, are sourced from a web of suppliers scattered throughout Asia, each contributing a vital piece to the puzzle. Over 40% of Nvidia's production is deeply intertwined with Chinese partners, who handle not just assembly, but also the manufacturing of key hardware. These partnerships have been carefully cultivated over decades, creating a seamless flow of expertise and resources. In fact, nearly a third of the raw materials and components that power Nvidia's chips originate from Asia's sprawling industrial zones, places where factories run day and night to keep up with global demand. This intricate network relies on trust, open trade agreements, and the ability to move goods freely across borders. But tariffs and trade barriers don't just impact finished products on store shelves, they disrupt the entire flow of raw materials, components, and sub-assemblies, causing delays and uncertainty at every stage. Rare earth elements like gallium and germanium, which are mostly processed in China, are absolutely essential for the manufacture of advanced chips. Without them, the entire process grinds to a halt. If these critical supplies are interrupted, even for a short time, the whole production line can come to a standstill, regardless of where the final assembly takes place. Nvidia's supply chain was meticulously built for a world of open trade, where goods and ideas could flow freely. It was never designed to withstand the shockwaves of a trade war. Now, new tariffs threaten to shatter this delicate system, risking not just a single link, but the entire chain that connects continents and industries. Rerouting this vast and complex web of suppliers, manufacturers, and logistics partners is a billion-dollar puzzle. One that can't be solved overnight. Every change ripples through the system, creating new challenges and costs. The result? The global chip factory, once a marvel of efficiency, now faces the very real threat of grinding to a halt. The stakes are enormous, billions of dollars in lost revenue, and the future of artificial intelligence itself hanging in the balance. As the world's technological engine sputters, the consequences are felt everywhere, from data centers to research labs, from Wall Street to Silicon Valley. The delicate dance of nations has never been more precarious. Nvidia saw the crisis coming and pleaded with Washington. Executives warned that cutting off global supply chains would cripple U.S. innovation and hand China an edge. China sales fund the R&D that powers American AI. Tech giants like Microsoft and Amazon joined the outcry, fearing disruption to their cloud platforms. The message: these tariffs threaten America's tech leadership. But Washington pressed on, prioritizing politics over industry warnings. Nvidia's pleas fell on deaf ears. The result? A policy that risks undermining the very innovation it aims to protect. When Nvidia's production lines grind to a halt, the impact isn't just felt within its own walls, it sends shockwaves throughout the entire technology sector. The world's biggest tech companies, from Silicon Valley to global innovation hubs, suddenly find themselves scrambling to adapt. The ripple starts with a single company but quickly spreads, threatening to disrupt the very foundation of modern computing. Cloud giants like Microsoft, Amazon, and Google rely heavily on Nvidia's advanced chips to power their massive AI data centers. These chips are the brains behind everything from voice assistants to real-time translation and recommendation engines. Without a steady supply, the backbone of cloud computing weakens, and the services billions depend on every day are suddenly at risk. A chip shortage means expansion plans freeze in their tracks. AI projects that were set to launch in months now face delays stretching into years. Product roadmaps are redrawn, and innovation pipelines stall. For companies betting big on artificial intelligence, these delays can mean lost market share and missed opportunities that may never return. In the fast-paced world of technology, a single year lost to delays is an eternity. While American firms scramble, competitors in China and other countries see an opening. With relentless determination, they push forward, aiming to catch up or even leap ahead in the global race for AI supremacy. The pain is even sharper for startups and researchers. Without the resources to stockpile chips, they're left waiting, their dreams and experiments on hold. For many, a single missing component can mean the difference between breakthrough and bankruptcy. Scarcity drives up prices, making essential hardware unaffordable for small teams and independent inventors. The grassroots of innovation, where tomorrow's big ideas are born, find themselves stifled, unable to compete with deep-pocketed giants. America's edge in artificial intelligence, built over decades, is suddenly at risk. Tech leaders gather in boardrooms, searching for solutions, as the threat to U.S. leadership grows more urgent by the day. The ongoing trade war only adds fuel to the fire. Tariffs and export controls threaten the flow of critical hardware, putting the entire U.S. tech ecosystem in jeopardy. Every new restriction tightens the squeeze on innovation and growth. If the shortage drags on, the global balance of power in AI could shift. New tech hubs may rise overseas, drawing talent and investment away from the U.S., and changing the future of technology leadership. A single policy decision, a new tariff, a change in export law, could upend a generation of American leadership in technology. The stakes have never been higher, the ripple effect is real, and growing. What starts as a chip shortage quickly becomes a crisis that touches every corner of the tech world, shaping the future for years to come. While U.S. tech scrambles, China accelerates its quest for self-sufficiency. The trade war is fueling a national mission: build a great wall of chips. Giants like Huawei and Baidu, backed by the state, are racing to develop homegrown AI chips. The performance gap with Nvidia is closing fast. Analysts now predict China could achieve chip autonomy within 2 years. If successful, China won't need U.S. chips, costing American firms billions. The world could split into rival tech ecosystems: U.S.-led and China-led. The era of global standards may give way to fractured competitive development. U.S. efforts to slow China may have created a stronger rival. Inside Nvidia, anxiety has replaced innovation. Projects are on hold, engineering teams are in limbo, waiting for clarity that may never come. Years of building global supply chains are unraveling overnight. Executives feel powerless, hostages to politics, not market forces. The risk: permanent damage to Nvidia's business model and culture. The human cost is real. Thousands of skilled jobs and careers are at stake. The company that powers AI's future can't plan its own. Creative energy is being drained by uncertainty. The trade war's toll is measured in lost momentum and lost hope. Moving production sounds simple, but in semiconductors, it's anything but. Nvidia is eyeing new sites in South Korea and Malaysia, but building a new supply chain takes years. Every supplier, process, and system must be rebuilt and certified from scratch. Advanced chip fabrication is even harder. New fabs cost billions and take half a decade to build. Even with government help, domestic capacity can't solve today's crisis. Relocation is a long-term play, not a fix for the looming chip shortage. Nvidia is trapped. Its old supply chain is broken, but a new one is years away. The gap leaves Nvidia and its customers exposed. The trade war's damage can't be undone overnight. The tech world stands at a crossroads. If the trade war escalates, supply chains could collapse and the global economy could fracture. China may retaliate by restricting rare earth exports, deepening the crisis. A best-case scenario: both sides compromise, tariffs ease and supply chains slowly recover. More likely, a messy middle emerges: tariffs stay but with some exemptions. Companies like Nvidia will scramble to adapt, costs will rise and innovation will slow. China will double down on self-sufficiency, accelerating the tech divide. The seamless era of globalization is over. The age of geopolitical technology has begun. Thanks for watching. Subscribe the channel for more updates.